Hello, welcome to the European Open briefing for Monday, January the 22nd. I'm Rafi Bahajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar started the week on a negative note following the US government shutdown on midnight on Friday. However, the dollar did manage to rebound a little bit, and overall, we're not seeing any panic in financial markets. The euro is slightly up this morning. It was boosted from the weekend vote by the SDP party, which voted in favor of starting coalition talks with Angela Merkel, meaning that most likely we will see a coalition between Merkel's party and the SDP and avoiding a snap election. The pound is also up this morning. It's being boosted by remarks by French President Emmanuel Macron in an interview on Sunday, who spoke in favor of a bespoke Brexit deal for the UK. And oil prices are up as well. We had some comments by Saudi Arabia suggesting that it would support an extension of the output deal beyond 2018. So let's start with the US dollar. We can see the dollar index is not too far from last week's 3-year lows. It's currently trading around 90.55, and also on the same chart in yellow we can see the yield on 10-year treasury notes, and surprisingly there's an inverse relationship between yields and the dollar. Normally both are positively correlated, although this morning we are seeing the higher yields somewhat supporting the greenback. The reason why treasury yields have been rising higher, partly because on expectations of higher further increases in US interest rates, partly because on reports that China may be reducing its holdings of US treasuries, and over the weekend since Friday we had the US government shutdown, so that drove the yields to a 3.5-year high of 2.672%. So that's been some support for the greenback, and even though the dollar is being weighed by the shutdown, overall market reaction has been fairly muted. Global stocks are mixed. In fact, Wall Street, the S&P closed at another record high on Friday, and in Europe and Asia this morning stocks are mixed. Some are down, but overall not much of an impact. There was a bit of a boost for safe havens at the start of trading in Asia today, but we saw those gains being reversed later on. Gold is currently trading around 1,330. It's still below last week's 4-month high, 1,344. And if we look at Swiss franc and the dollar yen pair at the bottom chart, again they did with the dollar did fall before steadying later on, although not so much against the Swiss franc. The dollar franc did hit a 4-month low of 0.9534 on Friday. We can see in orange here, it's actually the dollar franc is heading back down again, and coming close to breaching the 0.96 level. Dollar yen is a little bit firmer though. It's currently trading around 110.85. The yen will be in focus tomorrow. We've got the Bank of Japan policy meeting. They're not likely to announce any change in their policy, but they could revise some of their forecasts, particularly on economic growth. But there could be some signs that Bank of Japan is getting closer to not announcing, but rather to beginning a debate on how and when to start winding down its asset purchases. We could see a press conference by Kuroda, some comments in Kuroda's press conference after the announcement. Moving on to the euro now. The euro remains below last week's 3-year peak of 1.2322. But is above its earlier lows. It seems to have found support around the 1.2210 area. It was boosted by reports that Germany's SPD party has backed starting coalition talks with Angela Merkel's CDU-CSU party. Although the fact that the vote was very close, as many regional branches of the SPD voted against starting coalition talks, that could put pressure on this SPD leader to demand more concessions from Merkel, possibly suggesting that the talks in the coming weeks will be quite tough. And adding to a bit of anxiety, but overall, the euro has shrugged off. Even on Friday, last week, where there were some signs that the SPD might not back those talks, we didn't see too much of a strong reaction in the euro. The main focus for the euro this week is the European Central Bank meeting on Thursday. There's been a lot of talk in the markets that the ECB does want to end its asset purchases this year. They might want to put an end date to it, and also shift the focus of the forward guidance on interest rates rather than on asset purchases. Also, several ECB policymakers have been trying to talk down the euro, so it's going to be interesting to see what we're going to hear from Mario Draghi on Thursday. Moving on to the UK pound now. The pound is also up this morning. It's trading just below the 1.39 level at the moment. Last week it did hit 1.5-year high, 1.3945 against the US dollar, before heading back down again after UK retail sales for December disappointed. Retail sales fell by an unexpectedly larger 1.5% versus forecasts of just a 0.6% drop. That suggests that UK consumers ended the year on a negative footing, with UK consumers under pressure from rising inflation in the UK. On the other hand, we did see some positive remarks by French President Emmanuel Macron in an interview with the BBC on Sunday. He said that it is possible for the EU and the UK to agree on a bespoke trade deal, and well, part of that has already been priced into the markets, because we've been seeing a softer tone by the EU in respect of a close trade agreement with the UK in recent weeks, and that's one of the factors pushing the pound to above the 1.39 level, and yesterday's comments are a further indication of that. And finally, let's have a look at oil prices, because they did get a bit of a boost from comments by Saudi Arabia's energy minister on Sunday, who said that there is readiness to continue cooperation beyond 2018. That's the first time we've heard an OPEC member suggesting that the output deal could be extended beyond 2018. Although the reaction is fairly muted, WTI is up just 0.4% at the moment, around $63.60 a barrel. It's still below last week's 3-year high of above $64 a barrel. Oil prices could come under pressure in the coming weeks. We are seeing signs that US output is heading towards 10 million barrels a day. Plus, we could see the winter demand, which was one of the factors driving up prices, starting to come down, and we could see inventories perhaps starting to rise again. And even before all that, oil prices have been looking overstretched according to technical indicators. Looking at the rest of the day, it's going to be very quiet. The only major data will be wholesale trade numbers out of Canada. Also, it might be worth keeping an eye out on the Eurogroup meeting, because Mario Draghi will be attending that, and maybe might make some comments on the euro or the Eurozone outlook. That's it from me. Thank you very much for watching, and have a great day.